In recent years, index funds have become an increasingly popular option among the Indian investors thanks to its low cost and diversification benefits. If you are new to investing and if you are looking for a low cost, low maintenance way to grow your money, then you have come at the right place. Hey folks, I am Rishabh Shah, and in this video we'll talk all about index funds, how do they work, and if they are a good investment option for you. Now let's understand what an index fund is. It is a type of a mutual fund that seeks to track or replicate the returns of an index, such as the Nifty 50 or Sensex. To judge the performance of the stock market, we all say that today the Nifty was 1% up. So that is an example of an index. And instead of investing in an individual stock, you are investing in a basket of stocks that represent the broader market. Index fund look to copy the portfolio of a particular index and try to match its performance. These are passively managed funds, which means that the fund manager invests in the same securities that are present in the index in the same proportion. Now let's look at the fact sheet of Nifty 50 to understand it better. So this is the fact sheet, and as you can see, these are the weightages of company in Nifty 50. So Reliance Industries has a weight of 10.32%, HDFC Bank has a weight of 9.38%, ICICI Bank has a weight of 8.08%, and so on. So a fund manager will also invest your money depending on these weights. They will invest 10.32% of your money in Reliance, 9.38% in HDFC, 8.08% in ICICI Bank, and so on and so forth. So if Nifty 50 rises by 1%, then your portfolio will also rise by 1%. And in this way, the index fund will look to copy the portfolio of the index to try and match their performance. The difference between index and active funds are active funds try and beat the performance of the index, whereas index funds try and match the performance of index. In case of active funds, there are chances that they will beat the benchmark, that is, they will overperform, or there are chances that they will miss the benchmark or underperform. Now let's look at why index funds. What are their advantages? So number one is low expense ratio. Since they are passively managed and they just have to replicate the portfolio of an index, there is no need for a research team. There is no need to actively trade in stocks. This saves upon trading costs and operational costs, leading to higher returns. The second benefit is it is easy to manage. Now, fund managers don't need to be too concerned about individual stocks' performances. Instead, they just need to rebalance the portfolio periodically. So, therefore, it is easy to manage. The third benefit is it overcomes biased investing. Since index fund is based on rules and regulations, it eliminates any human discretion or bias while taking investment decisions. Last but not the least, index funds provide great diversification across sectors and stocks. For instance, if you decide to invest in a Nifty 50 index fund, you enjoy investment exposure to 50 stocks spread across 13 sectors, ranging from pharma to financial services. Now that you know what an index fund is and what are its advantages, the decision to invest in an index fund completely depends on your financial goals and risk tolerance. But it can be ideal for those who are risk averse, who do not want to take too much of risk, who want to achieve portfolio diversification, who are happy with hassle free benchmark returns, those who don't want to put in too much of effort to try and beat the benchmark, or those who are happy with hassle free benchmark returns can go with index funds. And finally, those who are investing for long term. Index funds are not ideal for short term investments. Finally, in my opinion, in the Indian context, if you can research and track your investments, if you can track your mutual funds, then you should go for active funds, especially if you want to invest in small and mid cap stocks, because historically they have provided better returns. On the other hand, if you want to invest in large cap stocks, then you can go for index funds, as historically they have provided similar returns. Thank you for watching this video, and if you find it useful, please subscribe to my YouTube channel.